What's up, everybody? Dave Bartosiak here, and I have another chart of the day. This time, we are talking about your favorite stock in the world. Probably not. Super microcomputer, ticker SMCI, and this is great stuff here, right? Why is it great stuff? Because this thing was the darling of tech starting off 2024. This stock was down $30, shot up over $1.20 in very short order. Okay. January 3rd, the first trading day of or January 2nd, rather, the first trading day of the new year, things closes at 28.55. Fast forward to March 8th. March 8th, $122.90 was the high. Pretty astounding stuff there. But then what happened? A pullback, right? And we're going to pull up some Fibonacci's here to show that, but you're going to pull back, interact with this 50-day moving average, which everybody knows I love, give up on that, interact a little with 200, fail there, try to get back over that 50-day, and then trouble. And what's the trouble been here? Accounting, some creative accounting, right? Now, I'm not going to point any fingers or talk a lot of garbage about the company here, but the fact of the matter is, I believe it was Ernst & Young, decides, you know what, we're not going to be your auditor anymore. So we don't like what's going on here. Some I'm not going to say underhanded dealings, but something that they just weren't comfortable with, right? So then Supermicro had to go ahead and find themselves another auditor, which they have in BDO, which is why the stock bounced after being threatened to be delisted from the NASDAQ. That's some drama. Okay, so let's go from that October low to that's March high. And here you see these fibs start to come into play, notably 38.2 and the 50%, right? Awesome how this works. I'm always just tickled to death when I see this, because remember, these fibs are drawn here in March. And then all of a sudden, these levels interact with the price in the future. So if you're not using fibs, you need to, just to give yourself an idea of what's happening with the stock, especially when it starts to retrace like this. It's one of the best tools that you can use. At least it's just sort of a roadmap, right? So what I like to say about technical analysis is typically what you gain is you know how fast you're going and what direction you're heading by using these moving averages and such. And then when you're using things like fibs and looking at previous areas of support and resistance, you know where the possible stops are in the road. Okay, the points of interest in that road, and you're not sure when you'll get there, if you get there, but you do know where they are should you get there. All right, so that's all fun and dandy, right? But what matters now is where the stock is. So stock $28, although by the time this goes live, it might be over 30, right? There's a big bounce last few days here after that news that, hey, guess what? We're not going to get delisted. You also have NVIDIA reporting earnings tomorrow, Wednesday, after the bell. That's going to be a big deal, right? A big event, and they are one of the largest customers of NVIDIA. Okay, this gap is really important because I think this is where, in the short run, you're likely to see resistance. Okay. And this gap, top end of it, just so happens to coincide with that 50-day moving average, right? It's just about spot on. So the high here, get this out of the way. Get out of the way, my friend. There we go. The high on October 30th, $38 even. And right now, this 50-day moving average is at 39.07. Over the next couple of days, that is going to continue lower. So we'll see what happens there. That's going to be key. Okay, so should it break through that 38 level, break through this 50-day, then now you have that 78.6% retracement, just over 44, which is the next level. So 38s, 44s. And then from there, you have the swing high, 52-ish, and so on and so forth. And we can go on and we can draw a bazillion levels up here, but that's going to feel like a long way away. Okay. Now, one more fib to draw. Let's go ahead and Get rid of this one. Okay. So should this thing stall out in the short run, you can draw a fib from the lows to wherever the high of the day happens to be. So you can do this by yourself at the end of the day. And let's just pretend that it already stalled out. Okay. Just to show you. So then you're going to look to these levels as areas of potential retracements where you can then load up again. So 50% is 22.93. So I'm sure there's going to be some buyers camped out down there should this retrace. So again, whatever this level happens to be today, whatever the high is, I know the pre-market high was in the 30s. So we're just below 30. I think it's like 29.99, or not pre-market today, but aftermarket yesterday. So it actually got above 30. So I don't know, 30.18 or something like that. You can draw that level and look for that pullback. Right now, it's a red hot today. Okay. We already traded 112 million shares. So, $3 billion worth of super micro has already gone off, which is pretty amazing. And that's where you're at. Right. So one thing to recognize though, right. So this is the relevance to today and moving forward. But when you get these stocks that have gone parabolic and they start to creep back in towards that 50-day moving average, you got to be careful. Okay. Because you will get a chance where they will bounce, right? And that will happen. But you want to get your stops in there when that does happen, just in case they break down, like this one did. And SMCI gave you another chance because they rallied back up, tried to break through that 50-day, and then the sellers came back. And you had that happen, sort of this choppy consolidation period after this huge run up. Not what you want to see if you're, long-term investor, but the negativity here, I think it's overdone unless this is a total scam. I hope it's not, right? I mean, if you go on Twitter, you're going to see a lot of people saying that this is like Enron level stuff here. I'm hoping it's not, right? What does the market say? The market kind of thinks that's, or it has been. So be careful on this bounce. Yes, it looks great right now. You feel really encouraged because now they've got that auditor, but there's also going to be conditions from that auditor too. So it's not all sunshine and lollipops yet. We're not 100% clear. We're not out of the woods, but that's the risk versus reward that you take looking at a company like this, Super Micro Computer. All right, folks, that's all I have for you in today's chart of the day. Be sure to follow the author here if you are on Zacks.com. If you're not, you're just on YouTube, that's okay too. Subscribe to the YouTube channel and come back and check me out tomorrow because I'm going to have another chart of the day for you. So for everybody here at Zacks, it's Dave Bartosiak. I want to say thank you. I'll see you next time.